Hello guys, welcome back to my channel. So in today's video I want to do a recap of our last live session from the trading view circle. So the reason why I'm doing this is because I realized our live session was not enjoyable enough for you guys to watch because of so many discrepancies and lots of connections, error connections, and disturbances that we had while making the video. It was actually a live session, so we had a lot of ups and downs, and well, in essence, the video wasn't really enjoyable for most people to watch. So I decided to do a recap so that I'll take you guys through what we discussed again, but this time clearer and more fast-paced. So during the last section, we looked at how the market moves, candlestick, and how they are formed. Trend explained, and also time frame movements. So that's top-down analysis. Those are the four things that we looked at, and I'll be taking you guys through those four things again, but briefly. So for this chart, for this tutorial, I'm going to be using a Forex pair, that is the Euro USD, as you can see here. And during our last live class, we used the crypto pair. Actually, we used the BTC, but let's use Forex pair this time around so that you guys will see that it's the same process, it's the same way the market moves. It's just about you as a trader getting your analysis, doing your prediction, understanding how things are and how they are meant to be. So let me start from the 1 hour time frame, and I'm going to show you guys how the market move now. You know, before this, we've had our discussions, and we've told you guys the market moves sideways, up, down. And the reason why the market moves up, down is because it's a transactional thing going on. People are buying, people are selling. So when more people are buying, definitely the price of something is going to go high. It's going to shoot up. And when they are selling, then the price of the commodity or whatever it is that they are selling is going to go down. So once more people are selling, prices automatically go down, and when more people are buying, prices automatically go up. This is the basics of what we have done in school and what goes on in the economy. So without wasting much time, this is it. Let's look at it in the market. I'm going to zoom this a bit. So this is the market. You can see a lot of blue and a lot of green and red candles. These are called candlesticks. These are called candlesticks when I zoom them up. So this is how a candlestick look like. This is it. So the red candlesticks are called the bearish candles, and the green candlesticks are called the bullish candles. Now the green candlesticks are formed when buyers trade the market, when buyers trade that candle cycle. So each stick is being opened and closed for a duration of the time frame of the chart that you are watching. Now what do I mean by that? This is a 1 hour time frame. So each candlestick here starts and lasts for a duration of 1 hour. So 1 hour, this is a candlestick. The next 1 hour, this is another candlestick. The next 1 hour, this is another candlestick. So when we go let me see. So when we look at this, this is a candlestick that is forming in the next 1 hour. Let me show you what I mean by this. Let me go to a BTC chart, and okay, this my chart is a bit rough. Let me take this. So when you look at this, you're going to see this is the price of the BTC here. Now you see 14, 13, and 58 is counting down, right? So what this means is this is a 1 hour time frame. So in the next 13 minutes, this candle is going to end, we're going to move. Another 1 hour candlestick is going to start reading. So in between that 1 hour time frame, you're going to see the price movement. The prices buyers are willing to buy, and the prices sellers are willing to sell. So if I go down to 15 minutes, you see now it's still 13, right? So this is 15 minutes. In less than 15 minutes, this candlestick is going to close. And when I go down to say 1 minute, this, okay, good. So this is going to end in the next 12 seconds. You can see. So now it's going up. That means buyers are in command, they're in control in the past 1 minute. So this is it, 57. A new candlestick just started being formed, and if you look at it, you see the countdown is going already. So now sellers are in control. Now this is happening in 1 minute, so you see the movement go on very fast. And when in 5 minutes, this is how it looks like. So for the 5 minutes time frame, this is going to end in about 2 minutes and 34 seconds. So that is how that works. That is how the time frame works. But let's go back to our Euro USD chart. So, and let me take you guys back to the 1 hour. So the first thing I want to look at here, the first thing I want to show you guys is the movement of the market. So this is literally how the market moves, like we say, up, down, up, down. You can say buying, selling, buying, selling, buying, selling. Buyers are in control, sellers are in control, buyers are in control, sellers are in control, buyers are in control. However you choose to interpret it, but just know that that's literally what's going on. So next thing I'm going to go to is the candlesticks. Now, candlesticks formation, if you are going into trading either Forex, either crypto, either any type of trading that you're going to, and you want to be a proficient trader, then what that means is that you need to know how to read charts. And to be able to read charts, you need to start from the basics, and the basics is candlesticks. So if you don't know candlesticks, then you're not ready to learn trading. You're not ready to read the market, and then you are not ready to make money from the market. So candlesticks is very essential. You need to know this is how charts move. You can see there are different kind of patterns to see your chart. This is a line chart. When you open a new broker account or any exchange or whatever it is, your charts are going to be displayed like this in line charts. So it's your job as a trader to know that, okay, what I have to use is a candlestick. So you can see there are bars. This is a bar. A bar is not as efficient as a candlestick. This is volume candles. Okay, I can't see this because I'm not in premium, but candles are what we use. They are the best. They give you the best information. They tell you what is happening in the market at a certain period of time, depending on the time frame that you are on. So when we look at a candlestick pattern, you can see okay, let me take this one out. Let's start from the bearish candle. Now if you look at this candle right here, look at this candle right here, this one, this candle here. So this is a bearish candle. Now at this point, from here, from this point down to this point, the market was in control. The sellers were in control, sorry. So that is why you see the movement from here to here was a down movement, right? So you can see 1, 2, 3, 4, 5 red candles, 5 bear candles. That is a bearish movement. So we call them bearish candle. We call them bears because they are red. So if it's green, we call them bull or dove. So a dovish market means the market is trending upwards. So for the candlestick now, let me zoom again so that you can see very well. Now I want to explain something closely. For a bearish candle, every candlestick pattern have what we call not a pattern, every candlestick formation have what we call the open, the close, the high, and the low. I take it again. We have the open, the close, the high, and the low. So for the open, in a bear market, this is where the open is, where you see my cursor indicating. Okay, let me use a line. Let me see if I can get a pointer. So let me use this. Good. So this place that I'm pointing, this is my open here. So this place is my close. Now you see a tiny wick above this point, right? Above this line that I indicated. So this tiny point here is called my wick, right? And for the wick here, the wick is above the candle. This is the body of the candle. From here to here is called the body of the candle. So this is my wick. So my wick here indicates that, okay, at this tip here is where the highest point the market got to. Let me take this up a bit. So this wick here is telling me that, okay, this is the highest point that the market got to. So the buyers pushed this market up to this point, but then the sellers were in control, so the market had to come down again. Now if you look at this pattern, this next candlestick, it's the same thing happening over. So this is our open, this is our close, this is our high. And if you notice here, you see a small wick, right? There's a small rejection. So here there is a lot of momentum, no wick. When you see this kind of candles, means there's a lot of volume, there's a lot of momentum, there's a lot of pressure in the market. When you see candles like this one, this is a doji. When you see this, it means, okay, there are not much pressure, but buyers and sellers were actually dragging. So here you see a wick. We call this a wick. This thin line that you're seeing on top of the body of the candle and below the body of the candle, we call this a wick. So this is showing you the high, the highest point, and this is showing you the low. That's the lowest point the market got to. Meanwhile, the open is still here and the close is still here. What is between the open and the close is called the body. So don't forget that. Whatever is between the open and the close, we call it the body of the market. So that's that. I hope you guys understand that. So let's look at the bullish candle this time around. So we're still taking from here to here. We're still using this margin. So if you look at this place now, you see what happened here. Red, 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 red. Then we have a green, then we have a red, then we have a green, then green, 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 green. Now from this point here, you see that after the first green there was one red, then more greens. Now the market went down here, the market came up here. This is what I mean. Let me do this. So you guys are following, right? So the market went down here, the market came up here, but I'm going to explain that. But before I do, let's go to the candlesticks, the bullish candlestick. So the green candles are called the bullish candlesticks, right? Now, you know, for the bearish here, I told you, okay, this is the open and this is the close, right? Now, for a bearish candlestick, when the close is always below the open, so the close here is always below the open. That is what actually makes it red. That is how it gets that red color. But for a bullish, the close is above the open. That's the difference. The close is above the open. So here, this is the open, this is the close, this is the high. So for the wick, this thin line, for the wick, it still remains. If you look at this place, you have a upper wick and a lower wick, right? So this is the highest point market got to, this is the lowest point market got to. The buyers took the market down to this point, but they didn't have enough pressure, so sellers brought it down a bit and it ended up closing here, but it was still a bullish candle. And at the point in time within this 1 hour, the sellers brought this point sellers brought this trade down to this point, but they didn't have enough control, so the buyers end up pushing it back up. That's what the wick does. That's what the wicks tell you. So when you see a longer wick like this, you know that okay, there's a multiple a high price rejection. That's what it simply means. So for the bullish candle, like I said, your open is here, your close is above your open. That is how it becomes green. So highest point, lowest point, and this whole space in between the open and the close is the body of the candle. Don't forget that. So I was saying something about this movement here. Now we always say the market moves in up and down. That means people are buying, people are selling, and that transaction that is going on is what the charts is actually displaying for you. So if you look at this point, from this point here, the market was going up, down, up. So buyers were in control, sellers were in control, buyers were in control down to this point here, and sellers were in control down to this point here. So now if you look at something here, there is a pattern you see evolving. So now what is that pattern? Let me show you. So buyers are in control here, right? Sellers were in control here, buyers were in control here. Buyers took it up again, right? So now buyers took it up to this extent here, so that means it got higher. So as it got higher, now sellers took control again. It got lower. You see that movement? So sellers took control, and then what is happening again? Buyers are taking control. So that's how the chart moves. You can see. So buyers are taking control. Now if let me color this yellow. So you can see that's how the market moves: up down, buyers selling, buyers buying, sellers selling. And candlestick, I've explained candlestick. Let me just give you a drawing of what a candlestick. Let me see if I can actually give you a drawing. Okay guys, I just did a little drawing to explain the candlesticks for you. So this is the body. If we're looking at the bullish candle, like I told you guys. So this is the body. This whole place is the body of the candle, from between the open and the close. That's the body. So the open is this place, the point where the candle started counting, and this is the close. Now this is the highest point here. This is called the wick. Okay, I didn't name that. Let me call it wick. Okay. So this is the wick. This is also the wick. So we have an upper wick and we have a lower wick. Let's call this lower wick. Let's call this upper wick. So don't forget, the wick shows rejection, price rejection. So it got to this point, rejected. That's what it means. Got to this point, rejected. That's what it means. So this is a bullish candle. This is how the candles are aligned and indicated. So for a bearish candle, this is the low. Okay, That is the same for both bearish and bullish. This is the high, this is the upper wick, so let me label this green. So this is the upper wick, and this is the lower wick. This is the body, so this is the body of the candle from here to here. Then our open, this is the critical part. For our bullish candle, the open is below the close, but for our bearish candle, the open is above the close and the close is below the open. So that is just the difference. So when you look at it like this, you can see this is the indication, this is the explanation. For every candle that you see in the market like this is how you read it. So it's crucial, it's important you understand the high, the low, and what they mean, what they're telling you, because those are the basics of candlestick. If you don't know them, then you are going to get a lot of things mixed up and confused in this market. So having done that, I think I have to quickly delete all this. Okay, let it be there for now. So the next thing we're going to look at is trend. What is trends? How trend moves? So now for trends, we have three types of trend. We have what we call an uptrend, we have what we call a downtrend, and we have what we call a ranging market. So I'm switching to a higher time frame now. That's a 4 hours time frame, as you can see. So I'm going to show you guys what we mean by an uptrend, a downtrend, and a ranging market. So when I zoom out my chart, when I zoom in my chart, you're going to see this, right? So now this is an uptrend. An uptrend simply means the market is going up, just like from this point down to this point. That is an uptrend. Now a downtrend means the market is going down, like this. This is a short downtrend, this is an uptrend again, and this is a short downtrend. So I'm going to use this, let me use this point here to explain a downtrend. I think this chart will do. So for you to know what a downtrend is, a downtrend comprises of something, of a certain pattern of movement in the market. Now what that pattern is a downtrend consists of lower lows and lower high. So when you see lower lows and lower high forming, you know that okay, this is a downtrend. Now what do I mean by lower lows and lower high? So let's take this point as our starting point. So this is going to be our first high. So now here so I'll call this our high, and I'll call this our low. Okay, so now we said lower lows and lower high. So this is our lower high, lower high, and here we have our lower low. Okay, you can see that clearly, right? Good. So the pattern repeats. Lower high here, lower low here. Okay, lower high here, sorry, lower high here, lower low here, and lower low here. Okay, let's put this here. Let's take this out. So now what do I mean by lower high and lower low? This is what it simply means. From this point here, sellers were in control of the market. They pushed the market down to this point here. So once they pushed the market down to this point, buyers were in control from here. They pushed it up. Okay, now buyers were in control. They couldn't go beyond this. Now this is the next lower high. It's called a lower high because it's not above this. Okay, so the next time sellers were in control from this point here, took it down to this point, a new lower high, a new lower low. Now this lower low is lower than this low, right? So from this point again, sellers picked up momentum. They pushed it to this place, another lower high, lower than this. So you see it keeps getting lower, lower, lower. That is how you know the trend is moving down. The price is depreciating gradually, slowly. So lower high goes down to the lower low again, and from lower low it moves back to a lower high again, and from a lower high goes down to a lower low. So now this pattern keeps repeating. When I zoom my chart, you are going to see that the pattern is down. It's going down, it's going down, it's going down. So this is a downtrend. So we call this, let me label this. This is a down trend. Okay, so this is a downtrend. Now for our uptrend consists of higher highs and higher lows. Okay, so let's take this from here. Let's look at our uptrend from this point here. So we're going to have another trend line here. Let's mark this place out. We call this our, this is a lower low, and this is a high. Let's call this our high. Okay, so from our high, then we have our low here. We have our low. Okay, so I'm just showing you guys what these things look like. So you see this point here, this point here is a little bit higher than this, right? It's a little bit higher, of course. So let's take this point here, and then we call it our higher high. Okay, now here will be our lower low, higher low, sorry, not a lower low this time, but a higher low because it's higher than this point. So we take another higher high right at this point here, and we take another higher low right at this point here. Okay, so that's what the market keeps doing. So we'll take another higher high. This so from this point to this point looks almost the same, right? So we can just, let's mark it out like this. Okay, then this low, there's something we call this in the market, but we won't call this a lower low right now. The reason why we won't call this a lower low right now, I'm going to call this X. Now there's why I'm terming this XXX. If you notice, this gets lower than this low and this low, but then after this low, prices moves way above our higher high here and gives us a new higher high here, right? And then it continues our pattern to gives us a higher low, right? So I won't explain this in this video, not today, but I'm going to explain it in one of our videos that I will be uploading soon. So if you want to know what that means, you subscribe to our channel, stay tuned, and watch. You'll be notified when that video drops. So this is what the market looks like now in an uptrend. The sellers push the market low, and then the buyers enter and push it higher. So we have a higher low, a higher high, and now sellers push it lower, but it didn't get lower than the previous low that we had. So now this is another higher high, and this is the movement, right? So I'm not going to take this, I'm going to omit this, pick it up here, and then take it from here down to this place. Okay, good. So if you look at our movement here, our chart pattern here, it looks like we are having what looks like a W, right? So that is how the market moves, up down, up down. So from this place, I'm going to, let me indicate this separately. I want to separate it so that you guys will really understand. Okay, so now you can see a downtrend here, right? Market is moving down. That is what we call a downtrend. Then for this part here, this is what we call an uptrend, right? So market is moving up, an uptrend. So this is a market that is trending upwards. When you see a market like this, you know that okay, the market is going up now, higher highs, higher lows. So that is what we mean by an uptrend market. Okay, so the last type of trend movement we want to look at is what we call the ranging market. Now that's the simplest. If you look at this chart here, okay, now I want you guys to observe this area. So this is a 4 hours time frame. So this point, if you observe this point, you see that okay, market wasn't really moving in a clear direction, right? It's just moving slightly. Look at this point. Here is another point here. Okay, so this is Monday 2nd 26th, and this is Monday 9th 26th. So from Monday 2nd to Monday 9th, that is a week interval. So this movement for a week, it means the market was ranging, because in between this week we can't see a drastic movement, a sharp movement of either the market going up or the market going down, right? So what that means is the market is ranging. That is the third type of trend, the movement that you need to know. A ranging market, that is indecision. A ranging market signifies indecision. That means you have to observe, don't make any trades, just watch the market and enjoy yourself, but don't make any trade, because after a ranging market, prices usually move to either high or low, but whichever move, and I said sorry, not high or low, either up or down. So you either see a breakout or a rejection. So I'm putting this down so you guys will understand. So this is an indecision. So that is what happens in a ranging market. And let me see, if we go down to a lower time frame, let me say 1 hour, you can see this more clearly. You see the market is just moving slowly. You can look at it here too. That is what's been happening, moving slowly, 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 slowly. Then it went poof up, slowly, 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 slowly went down again. So that's what a ranging market actually is. So if you keep scrolling through your charts, you're going to see more of these ranging markets. But so that is all I want to go into about that. Don't forget the three types of trends that we have in the market. We have discussed how markets move, we have discussed candlestick formation. I've showed you guys how the market forms. Then the last thing we're going to look at now is the time frame movements. So we call this top down analysis, but we're not really going to go into top down analysis now because this is not showing me a timer. I'm going to use a crypto chart for this. Okay, so I'm going to use a crypto chart for this because this is not showing me a timer, and not this chart. This chart is too choked up. I'm actually analyzing the market here. I'm in the market actually. I think my entry have just been taken, but let's look at this. So this is a 1 hour time frame, right? If we look at the 1 hour time frame, we see that okay, we have 38 minutes before this 1 hour time frame closes. Now when we go to a 4 hours time frame, now we see that we have 1 hour 37 minutes. So in the next 1 hour 37 minutes, this bullish candle that you are seeing here is going to close. I'm going to zoom it. I'm taking only the bullish candle, the present bullish candle. So I want you guys to follow me closely on this so that you really get what I'm trying to explain here, because this is key. So I'm taking just the bullish candle and I want you guys to see how it breaks down. Now what I'm trying to do, I'm going to show you how time frames work. This is a 4 hours time frame. That means this is showing you a market movement in 4 hours. Now if I go to the 2 hours time frame, I'm going to see this candle split into two. If I go to the 1 hour time frame, the candle is going to be split into four. If I go to the 30 minutes time frame, the candle is going to be split into 8. That is how it works. That's what top down analysis does. So now we are seeing just one candle here in the 4 hours. So let's go to 1 hour. Now you can see that, right? So this is the red candle that is not part of our candlestick. So let me go back to 4 hours. Let's see. Okay, I'm still cutting it small. I don't want to take it, but let me use a line to differentiate it. I think a vertical line will do. Okay, now so this line is our candle. So let's go to 4 hours and 1 hour back. Good. So you can see, remember our candle is going to end in the next 1 hour 30 minutes, and this one is in 35 now. So this is 1, 2, 3. When this one ends, the next candle is going to start. So this is the beginning of our 4 hour candle, right? It started bearish, then bullish. The bulls are in control, and we don't know what's going to happen next. But you can see this is a price rejection, right? So the market went up to the highest point here and it got down. So when we go to a lower time frame, you're not going to see a wick here. You're going to see a wick here because this timer is still ongoing. So the time frame, this candlestick hasn't been fully formed. But when we go to a lower time frame, like the 5 minutes, the 15 minutes, the 30 minutes, you're not going to see a wick. What you're going to see is a candle. So what we'll do, I'm going to note it so that you guys will see what I'm saying. Let me use a trend line. Let me just take it here, just small. Okay, so watch out for this. Let me color it blue, right? Light blue. So watch out for this. So this is 1 hour. Now let's go to for 30 minutes. So in the 30 minutes, you're still seeing a wick, right? So that means this move happened still on this candle. So this is 30 minutes. Now this 30 minutes candle is going to finish 4 minutes and 34 seconds, right? So 4 minutes 34. We go to the 15 minutes. Now do you see that the wick has shortened? So now it's on this candle, right? This is what I'm saying. So if you look at it, this has been our movement. This is where our 4 hours candle started, and this is where we are now. So for the past 4 hours, 3 hours or so, this is how the candles has been forming, and this is the 15 minutes candle, and what you are seeing on the 4 hours candle is this big candle, just one big candle. But when we are on the 15 minutes, we see this, right? So likewise, if we go down to the 5 minutes, can you see the wick now? The wick is very short. This is just the indication that we did. Now this is the buyers going into the market. So this is our 5 hours, 5 minutes. These are 5 minutes, as you can see. This is the candle that I highlighted. This is the 5 minutes. So when you look at this now, you see, okay, uh, this is where the candle started. This is the movement, sellers, buyers. This is another week, rejection. Now this is a large momentum going in here, so you can see that, and then this happened, and now we are seeing this. So probably before this 4 minutes candle finished, it might end up closing here. I don't know, but that's that. So guys, that's all for today's class. I've done a revision of our last class live session on Telegram. So we'll be having another live session soon, and I'll be uploading it on YouTube right after recording. So we're going to be having live sessions being posted here. If you want to learn, you want to be versatile, you want to grow as a trader, don't forget to like, subscribe to this channel, because we are going to be bringing you things that you have not seen on any other channel before. We're going to be taking you to the market live. We're going to be showing you how things are done, how we profit, how we make losses, because market trading is not all about making money. People should tell you that once you start trading, you're just gonna be making money, but it isn't really like that. It takes a series of patience, learning, and dedication. You have to be consistent in whatever you're doing. So stay tuned, follow us, like this video, and subscribe, so that whenever we post a new video, you're gonna get a notification. So that's all for today. Enjoy your trading session, and I hope you like this video. Tell me in the comment section below if you need more videos like this.